Picture a barren field, nothing but dust and scorching sun. Then suddenly, a pile of sugar gets dropped on the ground. What happens? Within minutes, ants pour in from every direction. They swarm, they fight, they trample each other. The stronger ants manage to drag a crystal back to the nest, while the weaker ones get bitten, crushed, or left behind, sometimes dying right there on the sugar. Sound familiar? That's the miniature version of every gold rush in history. And strangely enough, it's also a mirror of the economy we live in today. Back in the 19th century, when word of gold in California spread, people rushed in like ants chasing sugar. Farmers abandoned their fields. Craftsmen closed their shops. Fathers and husbands left their families behind. All of them clung to one dream, one strike of the pickaxe, one shovel in the dirt, and they'd become rich. But reality was brutal. Hundreds of thousands showed up. Only a handful struck it big. The majority left broke, sick, or never came home again. Just like a sugar pile. Too many ants, not enough sugar. Not everyone gets to carry something home. So who were the true winners of the gold rush? Not the miners with their shovels. It was the shopkeepers, the saloon owners, the blacksmiths, the people who sold shovels and tents and whiskey. The miners suffered, while those who built the ecosystem around gold became millionaires. And in nature, it's the same. A colony survives not because one ant grabs sugar, but because the entire nest, queen, larvae, workers, share in the reward. The lesson is crystal clear. Don't just chase the sugar crystal. Look at the whole colony. Don't just stare at the gold. Look at the entire system around it. Fast forward to the 21st century. The sugar piles of today aren't just gold. They could be oil, data, artificial intelligence, real estate. But gold still holds a special place. It's the safe haven when people lose faith in paper money. Why? Because for centuries, gold was money itself. There was a time when every US dollar, every British pound could be exchanged for real gold. That was the gold standard. Gold acted as discipline. No government could print more money than the gold it held in reserve. After World War II, the U.S. owned more than 70% of the world's gold reserves, stored in places like Fort Knox and the Federal Reserve Bank of New York's vault. America became the queen ant of the global monetary system. The dollar, backed by gold, replaced the British pound and became the world's dominant currency. But in 1971, President Richard Nixon stunned the world. He shut the gold window and ended the dollar's convertibility into gold. That moment, known as the Nixon Shock, marked the end of the gold standard. From then on, money was backed by nothing but faith in governments and central banks. And ever since, whenever that faith wavers, humanity runs back to gold, the one thing you can't just print. But let's go even deeper. Why does gold keep returning as the ultimate sugar pile, century after century? Because every time America prints too much, spends too much, or wages too many wars, the ants of the world remember one thing. Paper can burn, but gold endures. Take the 1970s. After Nixon shut the gold window, inflation in the U.S. hit double digits. Gas lines stretched for blocks. Families couldn't keep up with prices. But gold? It soared from $35 an ounce to over $800 in less than a decade. That's not a sugar crystal. That's an avalanche of sweetness for those who saw it coming. So who's dropping sugar piles today? Two names, Donald Trump and the Federal Reserve. Trump with his push for reindustrialization, trillion-dollar defense budgets, and trade wars. Every move is like scattering sugar onto the global economy. And the Fed, unseen but immensely powerful, tightens monetary policy to fight inflation, then pivots to cutting rates to rescue the economy. They are the invisible hand deciding when sugar is poured and when it's pulled back. So ask yourself, what happens if the Fed cuts rates? The dollar weakens, faith in fiat cracks, and instantly, gold shines as a refuge. What if Trump doubles down on defense spending, building missiles, fighter jets, and drone programs? The national debt balloons. Inflation ticks up, and gold, again, gets chased. Remember, the U.S. still holds over 8,000 tons of gold, the largest reserve in the world. More than Germany, more than Italy, more than the IMF. Even a small move, whether Washington holds tight or sells, can send shockwaves across the global market. So tell me, aren't we already in the middle of a brand new gold rush? Fast forward to 2008. The financial crisis shattered trust in banks and Wall Street. The Fed launched quantitative easing, printing trillions. Gold shot past $1,900 an ounce by 2011. While stocks collapsed and real estate imploded, those holding gold had a lifeline. And look at 2020. The pandemic froze the world. The Fed printed more money in a single year than it had in decades. Stimulus checks flew, debt skyrocketed, and once again, gold rallied past $2,000 an ounce, proving that even in a modern crisis, the same ancient refuge still works. So ask yourself, how many more times must history repeat before you realize that gold isn't just a metal, it's the backbone of financial survival? Let's break it down by time frame. Short term, over the next few months, gold reacts directly to the Fed. If they cut rates, gold surges. If they hold steady, gold may move sideways, maybe pull back. But ask yourself, is that a real reversal, or just the moment when weak ants get pushed aside before the swarm charges back in? Medium term, 1 to 3 years. Trump and Congress will keep spending on defense, on infrastructure, on semiconductor manufacturing. Trillions in spending means higher debt and a weaker dollar. Once again, gold wins. Long term, 5 to 10 years. America is pressuring rivals into recessions with trade wars, sanctions, and dollar dominance. As global trust in fiat erodes, gold will quietly reclaim its role as the shadow reserve currency of the world. At that point, it's no longer a sugar pile, it's an entire cane field for those who started accumulating early. Let's talk numbers because Americans love numbers. The U.S. national debt is now over $34 trillion. That's more than the entire GDP. It's like an ant carrying 10 times its body weight, except in this case, the weight keeps growing with no end in sight. The Fed's balance sheet, still above $7 trillion after all the so-called tightening. They told us they'd shrink it, but it's like ants trying to carry sugar downhill. The pile just keeps spilling over. And inflation. Even after the Fed hiked interest rates at the fastest pace in 40 years, prices haven't really gone back down. Groceries are still higher, rent is still higher, gas is still higher. For ordinary Americans, it feels like the sugar pile keeps getting smaller while more ants fight over it. Meanwhile, Fort Knox and the Fed's vault in New York still guard America's 8,133 tons of gold. That's about 261 million troy ounces, worth over $600 billion at today's prices. Why do you think they guard it with fences, cameras, and military-level security? Because even in the digital age, when money is just pixels on a screen, gold is still the one thing governments don't gamble with. If gold were just an old relic, why hasn't the U.S. sold it off? Why does China keep buying? Why is Russia stacking? Why is Germany repatriating gold from New York? Because deep down, every nation knows, when the music stops, the only seat left will be made of gold. For Americans, this question is urgent. The dollar loses purchasing power every single day. Inflation eats into every gallon of gas, every bag of groceries. So what can Americans do to break free? First, hold some physical gold. Not a mountain, just ounces, just coins. Your personal financial insurance. Second, use your 401ks and IRAs wisely. Shift into gold ETFs, energy stocks, defense, and critical technology. Third, build your own financial colony. Not just one lucky bet, but a portfolio designed to last, producing passive income, protecting against inflation, and building generational wealth. Don't think of gold as a get-rich-quick scheme. Think of it as a financial insurance policy. You don't buy car insurance hoping to crash tomorrow. You buy it because when disaster strikes, you want to survive. Gold is the same. It's your insurance against government mistakes, Wall Street greed, and global uncertainty. And yes, it's true, gold alone won't make you wealthy, just like one sugar crystal won't feed a colony through the winter. That's why you need a strategy. Physical gold for safety, ETFs and mining stocks for leverage, defense and energy equities tied to Washington spending, cash flow assets like real estate or online businesses for stability. That's your colony. That's your nest. That's how you turn crumbs into a fortress. And for those outside the U.S., every time the Fed prints, your currency weakens. Every time America wages a trade war, your economy feels it. So your strategy must be clear. 1. Stack gold, silver, and yen as shelters of value. 2. Invest in the very sectors Washington is funding: defense, energy, AI, chips. 3. Diversify income. Don't rely on just one market. Learn to earn globally, whether it's through financial markets, online businesses, or even YouTube, so you're not chained to fiat systems. You can't control where the Fed sprinkles sugar, but you can control whether you're the ant fighting in chaos or the one building a strong colony. Looking at ants again, 3 lessons stand out. First, don't rush in too late. The sugar's gone by then. In investing, that means don't chase the top. Second, ants don't walk alone. They follow the scent of the colony. Investors, too, must follow global money flows, not just their local markets. Third, ants survive because of their nest, their tunnels, their reserves. One sugar crystal doesn't feed them through winter. One lucky trade won't make you rich. Only systems, portfolios, and long-term thinking will. Now pause and think. What if the next crisis is bigger than 2008? What if the next shock is larger than 2020? The debt is larger, the stakes are higher, the world is more fragile, and every signal suggests the Fed will print again. Trump or no Trump, the ants are already stirring. The sugar is already being sprinkled. So here's the choice before you. Do you scramble like the weak ant, hoping to snatch a crystal before it's gone? Or do you build like the strong colony, digging tunnels, storing reserves, planning ahead, so that no matter what storm comes, you not only survive, but thrive? Because make no mistake, another gold rush is here, and this time it won't just be California, it will be global. The gold rush never disappeared, it simply changes shape. Yesterday, it was California. Today, it's the Fed's balance sheet, Trump's political chessboard, and America's vaults at Fort Knox. And as long as Trump and the Fed keep sprinkling sugar, the ants of the world will swarm again. The only question is, will you just stand by and watch, or will you step in with a smarter strategy? I believe knowledge is the real gold. My wish is simple, that those who watch this channel will rise, find freedom, and protect their financial future. Decode the markets. Protect your future. Ascend your mind.